It's Equity News on Equity Access, your daily insight of stock market developments and of developments in the Zimbabwean economy. Thank you for joining us as we broadcast live from Hampton Studios in Harare. I'm Ibn Mabunda. Let's get started. Veteran economist Eddie Cross has called for increased transparency on the interbank market system. This, he said, would improve the fluency as well as the fluidity of that market, kill the paro market as well as tame the runaway inflation. Eddie Cross has extensive knowledge in terms of the Zimbabwean economy, having served as the Parliamentary Committee Chairperson on Public Accounts. Last week, Dr. Mangujika said that over $600 million had been traded on the interbank market system since its inception in February of this year. We had a close up with Mr. Cross this afternoon. Let's have a look.
I think first you've got to write a short dictionary for the Reserve Bank governor.
A dictionary.
You've got to, and the first word you've got to describe is transparency.
Fair enough.
They don't understand that. They don't practice transparency. They don't publish their figures. There's no information coming through to us. We don't know what's happening. We do not know today what's happening, either on money supply or on how much money is being traded, or what the Reserve Bank is receiving, what are they paying, how they're dealing with the money that they do hold. We don't have any information at all. The interbank market, they publish a rate in the bank, but it's pure fiction. And then I get a rate on my cell phone produced by somebody in the informal sector, the traders.
Right.
And they put a rate on. So Money Market says the informal market rate today is 12 to 1. But there is no market. There's no formal market. There's no transparency. And I think that is the key issue which the government, which the ministry and the Reserve Bank have got to address. It's mainly the responsibility of the Reserve Bank.
What then can we do at this point to bring a balance in that market?
I'm telling you, if you made me president for one hour,
right,
the next day you wake up in a new Zimbabwe. Because what I would do, I would immediately instruct the banks, and all it takes is one instruction, that on 10 o'clock tomorrow morning, you come to the Reserve Bank, you sit around a table in the basement, you bring your selling orders and you bring your buying orders for foreign exchange, and we negotiate around the table what we are going to do. The second thing I would do is I'd say that everybody who is earning foreign exchange, all banks, all bureau de changes, everybody who's receiving foreign exchange must immediately place it on the interbank market.
As the country continues to grapple with electricity shortages across the board, Mr. Cross also clamored for the need for Zimbabwe to import electricity from beyond our borders. Zimbabwe in 2017 had monthly imports of $17 million, almost the same figure in 2018, but as of 2019 there has been a 79% decline to just $3 million per month. Let's listen to Eddie Cross expand on the subject.
On the power side, we cannot carry on as we are. We cannot function as a country on 6 hours of power a day. Don't delude yourself. We cannot, okay? We are crippling our industry. We are crippling the country. So we have to import power. There is ample power outside the country. Our needs are tiny.
Yeah, I just checking the stats. In 2017, we imported an average of 16 million. 2018, an average of 17. But in 2019, we've just been doing about $3 million, which is actually a 79% decline.
Yeah, it's crazy. It's lunacy, especially because there's plenty of foreign exchange. I'm told that by ZESA, that it would cost us less than $20 million a month to bring power into free supply. What?
Bank ABC adjusts interest rates to 30% effective the 18th of August 2019. This followed the upward revision by the Reserve Bank of Zimbabwe in terms of interest rates from 15% to 50%. This, of course, was a part of the statutory instrument 142, which reintroduced the Zimbabwean dollar. Meanwhile, ZB Holdings is putting aside housing projects in Beitbridge as well as plum tree as the contractor demands foreign currency. Tobacco sales are on the rise, coming in at 230 million kilograms as at close of day 82. This is just 3% shy of last year's performance. Value traded, however, is down 35% to $453 million. Last year, Zimbabwe recorded a record high of 253 million kilograms, raking in just below $1 billion in forex revenue. The nation is currently grappling with a trade deficit which came in at $2.5 billion in 2018 against $1.7 billion reported in the year 2017. Meanwhile, Anglo-American platinum output rises by 2% in the second quarter of 2019. This was mainly driven by their Brazilian operations. Amplats owns Unki mine in the Great Dyke of Zimbabwe, having opened the first smelter in Zimbabwe for a price of $62 million. This concludes our evening news bulletin. Up next is a look at the news in News Review. Stay tuned. Up next for the show.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe with a complete range of activities including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.
Welcome back, viewers. It's now time for News Review, and with me is economist Tinashe Kaduo. Tinashe, good evening and welcome to the show.
Good evening, Ibn. How are you today?
Won't complain, should only get better yourself.
I'm better today.
Superb. Now let's get the ball rolling. We'll start with Anglo-American output, which increases by 2%, driven by their Brazilian operations. What is your comment where their performance is concerned?
If you look at the Anglo-American platinum, it's one of the largest platinum players in the world. When output actually rising by 2%, in light of, if you look at in light of what has been happening in terms of platinum prices, I think it's something positive. But for me, what's positive about Anglo-American platinum is its investment even at Unki, where it actually invested around was it 60 million, 62 million in that smelting plant. That's actually positive, looking it in light of the government's drive towards local beneficiation and value addition in terms of our key minerals. Platinum is one of our key minerals, which is actually among the top 2 in terms of the mineral subsector in terms of foreign currency contribution. So I think it's actually positive there.
I realize, but in terms of the value that could be obtained from the Unki mine, what are your expectations? Do you think that this could be a game changer with the smelter now?
I have seen, if you look at the recent trade statistics, we have seen actually an increase in terms of that processed platinum. We are seeing actually an increase in value as well, and also an increase in volumes. It's something that is actually positive. Over the past couple of years, it was only Zimplats which was actually value adding its platinum. So now we have two players that are on board, actually value adding and processing that platinum. That's very positive.
I realize. Now let's talk about what we are just getting from Eddie Cross, who's clamoring, of course, for increased transparency on the interbank market system.
Yeah, if you look at what's happening on the interbank, I think what Mr. Cross is trying to say, which I also agree with him, is there is poor communication among bankers, among banks. If you look at what's happening in this market, in most markets, banks, they should communicate or have a platform where they would communicate in terms of their positions. A certain bank sending a message that I have orders of this much, and another bank saying I also have a demand of that sort. Then they have an agreeable price. But if you look at what's happening in Zim right now, I think there is not even an interbank to talk about. I think banks, they are only charging those interest rates, looking at their intra systems, where they are saying we have these bids and against these demands as such. So I think what Mr. Cross is saying is something that is actually a concern in the market.
I realize. Yeah. Then he also said that we need to import more electricity. Your take on that?
If you look at on the electricity,
because look, we've seen government reduce electricity imports, and that has had a pinch felt, across the board. And we also have the Minister of Finance trying to be more austere. Which buttons do you press? And yet, of course, in the main media, that has not actually been mentioned. The country is simply being made to believe that there is, of course, the Kariba story, and that has been much on the forefront.
First of all, Ibn, I think the discussion there that we have to agree is the issue of electricity. Is it just about imports, or is it just about our past behavior? To me, what's happening or what's playing out in the electricity subsector is much to do with our past behavior, especially on imports. I don't think that the finance minister, being rational, would austere, your electricity, because electricity is a necessity. Austerity, it means cutting expenditure on something that's not important. And looking at electricity is something that is very much important. So I think that drop from on average monthly spend of 16 million over the past 2 years to the current 3 million, I think it's just a result of high debt accumulation and all those foreign currency shortages. You see, there are some views and some analysts who are saying that the country has got a lot of foreign currency. Some, they're actually are giving figures of around 1 billion, which I think it's actually overstated. If you look at what's at play, we owe a lot to ZESCO. So if we had 1 billion in terms of foreign currency, why is it that the government is struggling to pay? So those are the issues that are affecting our electricity. It's not just we should import, but we also look at the past debt as well. We have got huge debt that we have accrued over the past years where we were not paying on time. So you find that even the suppliers or those countries that could actually sell electricity to us, they are now becoming a bit more hesitant. We have seen over the past couple of years when His Excellency actually visited his counterpart in South Africa, they were actually are trying to negotiate for ESCOM to actually sell electricity to us after ZESA paid, I think, around 10 million towards that 80 million debt that was announced. But we have seen that nothing is actually is actually happened after those engagements, which means that even our peers there, or those companies that could assist us right now, they are also hesitant. You look at the negotiations with Mozambique as though nothing as though has come to pass. So we are a country which has got high debt, and when you have got high debt, everyone will be scared. You are now a high risky client, so everyone will be scared to deal with you. It's not just about importing. To me, I would think that as a country right now, we should maybe try to incentivize importation of those instruments or those energy sources that would substitute your electricity. I think we should incentivize
that. That's a process. But for now, how do we address the challenges that we have?
But you see, we have a challenge. We are in a fix. You want to import, but your ESCOM doesn't want to sell to you because you are a high risky client. What should you do? Try maybe to invest in alternative sources. Incentivize people in terms of importation of the likes of solar, or try to invest in those mini grids or mini power generation projects. We did a research that we published recently as Equity Axis, where we actually laid out, or we actually found out that to set up a mini grid, sometimes it costs, in terms of time frame, lesser than 2 weeks or a week if you are committed. So what we have seen over the past couple of years is a situation where the government and even those parastatals that are actually that are concerned in terms of procurement, as well as the actual granting of those tenders, they're actually giving those tenders to players that did not have adequate capacity to execute such projects. You have seen even some other countries, when there is a blackout, they actually they actually invest or undertake a quick substitute generation capacity, which they can fix or create in a day or 2 days. Then the whole country would be up again on the grid.
I see. Now let's talk about ZB. They cannot proceed with their Beitbridge and Plumtree plans because the contractor needs payment in foreign currency. Is this something that is unique to ZB, or there are many more cases like that?
I can't say it's something that is unique to ZB, but certainly you see these developments are in the economy where some certain projects are being delayed. To me, it can point out, to the initial highlights or the initial, totals that the statutory instrument 142 is about to fail. I think, like what I previously said, that SI 142, I felt that it was more of a rushed policy where authorities wanted, to push for a certain objective, and they were in total fear that the country is actually headed towards, a certain direction which they didn't want. But when the economy dictates that we should be dollarized, if you go against it, that's the heavy price that you pay. You will pay it in how? High inflation, delay in execution of projects, more and more companies downsizing, more and more people, are demanding for high salaries and adjustment and something like that. High risk of demonstrations and protests. That's what we are seeing right now. So what's happening at ZB, to me, it's not unique on ZB alone. I think there are so many companies who are on the same predicament with that of ZB.
In the same bracket of financial services firms, Bank ABC increasing lending rates to 30%. Your take?
Yeah, I think now they are actually responding to one the lift in terms of that cap on interest rates by the RBZ, but it's not just the lift on the cap that they are responding to, but also the high inflation, which is actually approaching the 200% mark. In terms of our projections, we are looking at inflation approaching by September the 400% mark. So if you look at the economy, how things are actually turning out, I think even that adjustment of the base lending rate to 30% on the balance or in real terms, they are still on a loss position. So I think those running loans, those loans that have not been yet paid, I think that's where maybe that bank might be able to cushion itself. But at 30% to me, it's still very low when you compare it to an inflation of 200%. It means that when you lend at 30%, when your inflation is at 200%, you are already on a loss position. So on the balance, yes, we might say that it's positive for the bank, but in terms of the outlook, it's actually some of the concerns that are crippling the economy. But also, I would also want to comment that there is also high risk that if you are aggressively increase your lending rates, maybe your clients might also struggle to pay. So we might even see or project an increase in non-performing loans, which is actually a risk that banks currently face. And if you also look it in light of the government's position, where the government doesn't have that sovereign capacity to bail out banks, we are actually in a fix and we might be headed towards another financial sector turmoil.
I realize. Now, also talking about, trends on the macroeconomic space, tobacco figures here coming in as they are in this particular manner. You have your mass sold at this point coming in at 230 million kilograms against last year's performance of 237, which is a difference of just 3%. However, the value is 35% below last year's. Last year's came in at $692 million. At this point, we're at $453 million, $453 million, sorry. And then in terms of the price, it's 33% below last year's, which came in at $2.92. This year, we're just $1.96. Your take in terms of the figures that we see projected here?
What we're seeing now at play is we are actually seeing an improvement in terms of tobacco deliveries. During the start of the selling season, we had seen farmers a slow start in terms of slow deliveries, in terms of selling. What was happening at play there in the March, April, it was actually to do with that confusion in the monetary space, where farmers actually demanded their payment in US dollars, and there were also confusion whether they will be paid in US dollars or in local money. But now, it's now definite that we are certainly in a local currency environment, and farmers, they could not do better to hold their bills, but they would just seeing it better maybe just to go and sell at whatever prevailing price. So that's why we have seen the gap narrowing down. But at 230 compared to 237 same period last year, just a 3% difference, I think is something that actually tells that the slow start was not about production per se, but it was about policy and macroeconomic confusion in this economy. So
production, could we see a decline next year because of this variance here, 33%?
I think the major factor there, like what I was trying to say, is the slow start wasn't to do much about production,
of course,
but it was to do much. It was much to do with policy confusion and unstable macroeconomic environment.
So now my question is, now that we've seen that, we've got that matrix and we've got very low prices in terms of the kilograms, because this is a 33% variance. Last year, farmers were getting $2.92 per kilo. Now they're getting $1.96. Could that possibly discourage farmers from engaging?
First of all, if you look at what happens in the tobacco subsector, 80% of production, over 80% of production is through the contract system rather than the auction system. So if 80% of those deliveries are due to contracted farmers, I believe that this year again there will be so many farmers who would opt for the contracted path. Because the contracted path, your price will be certain, and you will be better in terms of negotiating a better price. You can compare there. If you look at in terms of 2019, your highest price there on your contract was $5.75, which is slightly just 8% below the 6.25 obtained last year. Then your auction, you have seen that your highest price, where is the auction there?
Highest price in terms of the auction would be here, which is $4.79.
Yes, sorry. Yes, which is west off from the 575 that was obtained, last year. So I believe that with the turmoil in the market and price carnage in the market, I don't think that there will be individual farmers who will be able to self-finance themselves to undertake tobacco production.
So we're likely to see
you look at farming. Farming is a high cost, enterprise, which I think with all the price developments that are happening, we might be seeing more and more farmers trying to go the contract route rather than the auction route. But that the auction route, maybe if the RBZ and the government chips in and maybe trying to expand that command initiative towards more and more tobacco farmers, that's where we might be seeing tobacco farmers going that route. But positively, we have seen that over the past couple of years, the RBZ has been announcing, various lines of credits to support farmers that go through the auction route, and the agribank as well has been very active in terms of financing individual farmers as well. But I generally, what has been happening this year wasn't that positive for the agriculture sector. But for tobacco farmers, I don't think that we might see many farmers, trying to move away from tobacco, because when you move away from tobacco, which other crop would you undertake? If you go to maize, there are all sad stories about GMB. If you want to go to cattle, I don't think it's something that you can.
There's been a lot of noise about castor bean.
Castor bean is a long-term project, and I don't think it's as lucrative and as orderly marketed as tobacco. So tobacco, to me, I believe, is the only cash crop that has been successful over the past couple of years in Zimbabwe. If you want to go to cotton, it's a story.
That's a very sad story. Tinashe, we have to go. Thank you so much for the perspectives. Thank you, viewers, for staying with us. Up next is a look at the stock markets in Market Daily. Don't go anywhere.
Good evening, ladies and gentlemen. Welcome to Markets Daily on Equity Access. My name is Anisi Chumbumu, and we're going to have a look at the stock market today and the forex market. Now, as we get into it, statistically speaking, volumes were down 66%. That means that volumes traded on the stock exchange only amounted to about 2 million, down from 7 million in the prior session yesterday. And we also experienced a downward movement in terms of number of counters that exchanged hands, from 20 counters to 16 counters. Of those 16 counters, only one was a riser, while 9 were laggards, and the rest were sailing stable. Now, as a resultant of that, our aggregates did move in the negative, right there, as we experienced a 0.07% decline on our all-share index and a 0.06% decline on the industrials index. Now, mining's index was pretty much stable. Top 10 index was the only one in the positive today, coming up 0.14%. I think much to do with the 2.52% movement by cassava. It being a heavier counter on the stock exchange, much more than BAT, Old Mutual, and Padenga. It then had the bigger influence on that index, even though BAT did drop 8.86% on its share value, down to 3,600 cents, and while Old Mutual then cut short its long trend of a bullish run, coming off 0.12% for it to settle at 1,575 cents. Padenga has resumed on its bearish drive there, coming off 0.02%, while Econet and Delta have also receded in that same regard. Now, on a 5-day trend, all share indexes up 0.91%, top 10 index 1.41%, industrials index is 0.91% ahead, while the mining's index is up 0.94%. Now, as like I just did mention, that we had one riser and 9 laggards. Of those 9 laggards, PPC did let up 11.19% in its share value, coming down to 195 cents, even though it is still heavily discounted in comparison to its dual-listed counter on the JSE down in South Africa. Now, BAT, we've already mentioned on that. Nickels coming off 8.33%, even and I'm still very much interested and as to knowing why they have to let go of their hotel business under the Nickels brand. But I suppose for that section of their business, it hasn't been performing very well, but they have been enjoying a very good run in performance in terms of their retail and agriculture sector, where you'll find that Pick and Pay TM has been pretty much the biggest bull on the market as of late, giving actually some huge competition to counters like OK, that also did come off today by 0.86% for it to settle 45 cents. Now, such competition has been very critical to OK, and it has pretty much reinvented itself and has in a responsive way increased some of its store space and increased some more stores within the region. So it should see them translating some of that into more volumes, even though with their most recent financial results, they did mention that their volumes only went up 1%, which does show how the economy has had a huge effect on retail businesses. Also, the fact that we have a huge deficit in terms of foreign currency. FBC did close off the set of laggards, coming off 0.25%. Now, for our forex market, the interbank rate is at 8.85, while parallel market is settled at 9.5. Some trades did go up as high as 9.9, almost into the 10 region. I suppose we're going to be back in the double-digit region very soon, especially as we have seen a lot of rigidity in terms of the seller side on the interbank formal market, where you'd find that the bid price has been moving slower than the ask price. Now, such kind of a trend is very worrying as to why you would find that banks are holding on to a lot of US dollar, or is it because of an instruction from the central bank? We wouldn't know really, but it would be going against a lot of regulations within that sector. For our old mutual implied rate, it is at a solid 10.04. Now, do not forget to like, follow, and subscribe our YouTube, Twitter, and Facebook accounts at Equity Access, and do visit our website www.equityaccess.net. And you surely do not forget to register and get ready to receive our Q2 economic paper that shows much to do with what is happening in the economy as at Q2 ending July, and then also us giving you an outlook as but still 175% inflation rate does keep them in losses. Good evening.